All right, let's talk about KSPI. This is a company operating in Kazakhstan and also now in Turkey. I'm going to get more into that. Everything app, they're doing financials, they're doing marketplace. Let's look at the number and let's talk about the market that they're doing business in. Recently listed on the Nasdaq, we can see share performance down. However, they have also paid out dividend and the forward-looking yield is very strong at 8.62% right now. And when a company pays out dividend, of course, that goes down from share price. So all in all, we got to look at total returns for a company like that. And how do you get returns from emerging markets? Well, oversized dividends is historically one way to get paid from emerging markets, because no matter how good the numbers look, they are never going to get the valuations that European and American stocks get. We're going to talk a bit around that as well. This is a joint venture, two players that came together. In this case, we see large insider holdings, about 60%, and the rest largely held by institutions. So retail investors not big in this company, and why should they? Lower access, sure, they're listed on the Nasdaq now, but you can trade it on, for example, Revolut, just from a normal account here in Europe. In terms of the numbers, they are strong. Earnings per share has been growing steadily, quarter over quarter, year on year. A lot of risk has been introduced now with the new ventures here in Turkey. Very, very risky. I'm gonna get into that. But revenue has been growing, and they have super large market share here in Kazakhstan for this everything app. Some could say monopoly, although I don't think we're ever gonna see charges in Kazakhstan on monopoly trial. Once again, this is not America. But to chase growth, they have expanded into Turkey. Turkey, of course, is an economy in hyperinflation, very, very high inflation. I remember one company that I owned in the past that did liquid neutral gas and sold this in different emerging markets. They have tankers that anchor offshore so they quickly can leave if trouble arises, and they operated in, for example, Turkey. So if customers were unable to pay on contract, they could just lift anchor, sail somewhere else, and continue to export. So that's the type of economy that we're talking about. A lot of my friends have traveled to, for example, Turkey. It's used to be more of a common destination for Europeans for holiday. Although if you go there now, you might look at the website, book a hotel, and when you get there, you get a completely different room with cockroaches, and the guys just say, "Hey, what?" And that's the type of business climate that you have in a nation such as Turkey. Very, very hard to grow reliably and to make predictions for where revenue is going to be, where earnings per share is going to be. We've seen military coups in countries like that. We see, for example, the president over there appointing himself as a central banker, deciding interest rates, one of the major reasons behind large hyperinflation. And for example, for Kazakhstan, they act a bit as a proxy for Russia in terms of export. Russian export dropped significantly after sanctions, and lo and behold, a lot of countries, such as, for example, Kazakhstan, in this case, all of a sudden start exporting more oil and gas. Boom, it goes up, Very, very interesting. Complete coincidence, by the way. There's absolutely nothing there. So that's the type of economy that we're operating in. If you're American, you can look and see, all right, Latin America, emerging market, it's a bit chaotic, you hear about it on the news. Well, this would be the Latin America of, the Asian part, so to say. And just a lot of corruption. For example, Uzbekistan, we saw a big fine for a Swedish company over there for bribery. Telia in the early 2010s is a part of doing business down there. Although, in terms of listings, it shows that corruption has been going down. But it's a very, very different business climate than the ones that us Westerners are used to. And this is one of the reasons that we see price to earnings for this company being so low, trailing here 8.48. We're never going to get standard S&P 500 valuations on companies in the emerging market because of all this extra risk that just is baked into it. So even though we're seeing amazing earnings per share growth, we're seeing revenue growth, high dividend, very nice of course, but in terms of valuation metrics, don't expect this to be expanding. Don't expect this to be a rocket ship that will propel share price higher in this case. If something, it could even be a bit lower with all the risk that they're taking on expanding into Turkey in this case. So very, very risky emerging market stock. Could it be a good bet? Potentially. Of course, it could go amazingly. You could make fantastic gains. Emerging markets on paper should perform better. It's like small cap stocks when you compare to the traditional market portfolio. But know that you take a lot of risk. And in situations like that, it's good to have extreme understanding of the underlying assets, because stock price can go up, it can go down a lot, and if it goes down a lot and you don't fully understand why, it could be new law in Kazakhstan or who knows in a market like this, then it's going to be very, very hard to hold on to that stock position for the time that you need to hold on to it. Of course, it gets easier since you're paid dividend in this case. But man, very, very difficult to judge risk to reward ratio. And there's plenty of other opportunities out there closer to home that's way easier to understand and where you have protection for private property in a completely different manner. Ask some of the people that have done a lot of business in the emerging market. For example, you can take a look at the guy Rich Dad Poor Dad, Robert Kiyosaki, when he talks about his gold mine in China. Just ceased, This is the type of thing that can happen in emerging markets. Take a look at, for example, Petrobras in Brazil right now. Used to do just oil. But now, since the economy is doing a bit bad, they have this political connection, and now they are forced to do business in other areas of the economy that they have not traditionally been in, independent on expected return on investment. It's just, keep the economy afloat, put that oil money to use to the detriment of other shareholders perhaps. That's the type of shenanigans that you can expect in emerging markets. So a large dividend and a large risk. That's the bottom line assessment of a stock like KSPI. Alright, that's been it for this video. And as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.